Okay, I want to set the record straight on interest rates. Where are we right now? And what is everybody saying out there? And are they being totally truthful? So, number one, Fed came and cut rates by a pretty decent margin, more than people thought, less than other people wanted. And here we are. And so rates started coming down, and then we got slammed again by bad news for mortgage world, but good news for others was the jobs report on Friday. Rates tanked. We've lost about a full percent, or roughly 100 basis points on rates just since last week. So everybody out there telling you that rates are coming down, it's time, refi. Well, rates came down last week. There was a little bit of a lull, and now it might not be as good of a time as it was one of the days last week if you hadn't locked in already. So you're going to start seeing a little bit worse right now, and we have to wait for the next little portion of the rate. So up, down, peak and valleys, and we're waiting for another peak. So if you don't take advantage of an interest rate right away, there is always a chance that the rate could go up and get higher and it's not there for you anymore, or that it could continue to get lower. It's almost impossible to time the bottom of the market. So I want to talk about rates, and really just note in the back of your head, if you hear something and it's good for your situation and your family, then if you like it, lock it. It's going to be really hard to time the bottom. And because there really is no true bottom, it kind of goes like this all the time, every day. So the jobs reports came out. It showed very, very strong jobs numbers, way more jobs being created than the experts anticipated. So here's Reuters, right? They're a pretty well known source. Look at what they have to say. A robust jobs number could mean smaller Fed cuts, or it could mean that the Fed decides to stay put and not cut one time, November or December, or into the first quarter of next year. So these kinds of reports that come out, consumer spending, jobs reports, these things that show resiliency in our economy, they actually go against mortgage rates and hurt our chances of getting better mortgage rates sooner. So because of this, we lost all that steam in the rate market. And now the things that I quoted last week for customers aren't quite available now. We're going to have to wait a little bit longer and hopefully get some rebound through the market. So expectations of lower rates have anchored trades across the markets. And then now when they see this, jobs report come out that beat expectations, it's a surprise. That's bad for something that is anchoring trades across the market. So surprises are bad in markets, and then they trickle down and make mortgage rates not where we hope they could be. So look at the 30-year fixed just over the last couple months. Hopefully you can kind of see it here where my mouse is scrolling. We have been coming down for a while now. So all the way since April, we've really started to see things come down. And then boom, back here, I think this was another jobs report related hike, but then it comes down again. And so just in September, we had a really good month of mortgage rates. Came all the way down to an average nationally of almost 6%. So with that, if you have great credit, somebody like me as a mortgage broker really helping out and finding the right place and the right loan strategy, maybe you got a rate in the fives on a conventional here. And this is a 30-year conventional that we're looking at. But then because of this reports, we're starting to climb up. And then, of course, in less than 30 days, we've got a big, heavily anticipated election that everyone thinks is going to really change rates. But we just don't know exactly what the markets are going to do, because anytime there's a surprise, the markets can react positively or negatively. With this jobs report, they reacted negatively. So look at here, just in the last few days, we had almost a 0.5%, 6.2 to 6.6, so 0.4, almost 0.5 percent difference in rates, and then we're just getting a little bit worse. So hopefully we're going to start seeing a lot more green like we have in other sections. It comes in waves. So instead of riding that roller coaster, once it comes down a little bit more and you like the rate, you like the situation that you're going to be put in, lock it. If you like it, lock it is a saying that I've heard and I really like, because it's more about your situation and real estate being a long-term game. So things like this can get in our way and our plans. The market doesn't necessarily care about me and you as individuals. It just does its thing. But look at this. This is really nice to see. Overall, this is down and to the right. That's where we want rates to come. This is kind of what everybody's been saying based on Fed and all the experts out there trying to analyze these things. And so hopefully we continue to see this trend. But right now, this was a bad little blip on the radar and sent us back reeling a little bit. So be careful of bait and switch marketing. Be careful of people promising you rates. If you've had conversations previously, please make sure to call them and refresh those conversations, because what they've quoted you or what you have been quoted may not be the same anymore after a big increase like this. This is a pretty fair change in the market that is going to make numbers different. So if you're out there shopping, my hard sales pitch ask to you is that give me a chance. We'd love to take a look at it for you and see if we can save or compete by beating whoever you're working with now. So as a mortgage broker, we have extremely low overhead, and we pass those savings on to our clients instead of paying the man behind the curtain like an Oz. So we want to help you save money. Please reach out if you have any questions, but also stay vigilant and stay informed, because this is just from Friday to Monday changes. Boom, boom. That is a big deal. So every day in the mortgage world is a crazy day for now. Probably going to get a little crazy over the next 30 and 60 days with the election and election fallout. So any questions you have, we're here for you to help be a resource. Please call us, and we'd love for you to like and subscribe and share our channel with people. I'm really trying hard to make sure we give you actual information that you can use, and so that you understand what's going on, so that you can be a part of the process and really learn, and then use real estate to help build your wealth over time. So love to help. Call us, direct message, and like and subscribe to our channels, and we'll put out some more information soon about election cycles and what interest rates do on major election years. So look forward to the next video.